Welcome to this explainer. Look, today we're handing you the ultimate financial tool so you can conquer the Idaho real estate market without going broke. Let's get right into it.
So before you start hitting open houses in a state that's booming with nearly 2 million people, you absolutely have to know what you can actually afford. I mean, it's so easy to fall in love with a property, right? But securing your financial future, that means running the numbers first. And that is exactly why firing up an Idaho Mortgage Calculator is literally the most powerful step you can take to dodge any nasty surprises down the road.
Here's our quick roadmap for today. We're going to look at the true cost of Idaho homes, break down your monthly bill, dive into down payments and loan terms, talk about why credit scores matter, and wrap up with how to plan before you buy.
All right, Section 1, the true cost of Idaho homes. You know, what's really brilliant about these calculators is how insanely simple they are to use. By plugging in just 4 variables, you take this terrifying financial guessing game and turn it into a concrete plan. You just pop in the home price, your upfront down payment, the expected interest rate, and your loan term. Bam! Instantly, the calculator takes those numbers and hands you a super reliable glimpse right into your financial future.
Moving on to Section 2, breaking down your monthly bill.
Okay, so your monthly bill is basically a multi-layered pie. We call it PDI in the biz, and this is exactly why flying blind without a calculator is a huge mistake. PDI stands for principal, interest, taxes, and insurance. Now, the principal builds your equity, and the interest, well, that's the lender's cut. But if you aren't using an estimator to account for those taxes and insurance, your monthly budget is going to take a major unexpected hit.
And you absolutely have to account for the local flavor here. For example, Idaho has this incredibly low property tax rate of roughly 0.43%. That's huge. It actually makes your overall housing costs way more manageable. Now, lenders usually bundle these property taxes and your homeowner's insurance into a monthly escrow account. But a state-specific calculator factors in this exact 0.43% so you can budget with total confidence.
Up next, Section 3, down payments and loan terms.
Let's bust a myth right now. You do not need 20% down. No way. The calculator actually lets you see how putting down just 3 to 3.5% can preserve your emergency cash. Don't get me wrong, hitting that 20% mark is awesome because it lets you completely dodge private mortgage insurance, or PMI, and pay less overall interest. But bringing less cash up front means your savings stay intact, even if you pay a slightly higher monthly insurance cost. It's a trade-off. And right inside the calculator, you can safely test the waters between a fixed rate and an adjustable rate mortgage. A fixed rate is your rock. It guarantees stable, unchanging payments for the long haul. On the flip side, an adjustable rate mortgage, or ARM, gives you this sweet low rate right up front, but it carries a very real risk of rate hikes later on. Running both scenarios shows you if you could actually survive a market shift down the road.
The same goes for the timeline. When you model a 15-year versus a 30-year term, you instantly see the harsh trade-off. A 30-year loan stretches the debt out so you get lower payments today. But a 15-year loan, yeah, it squeezes your current cash flow, but man, it builds equity incredibly fast and saves you a literal mountain of money in interest over time.
You know, Benjamin Franklin once said, "The bitterness of poor quality remains long after the sweetness of low price is forgotten." You really want to keep this wisdom in mind when looking at interest rates. Sure, it is so tempting to jump at an adjustable rate just to squeeze into a slightly bigger house today. But your ultimate goal is building a financial setup that won't leave you bitter 5 or 10 years down the line.
All right, Section 4. Let's talk about why credit scores matter.
When you start running different rates through the tool, you'll quickly prove to yourself that even a slightly better credit score unlocks drastically lower interest rates. Lenders always reward less risky borrowers. As you'll see when you play around in the calculator, just a tiny drop in your rate slashes that monthly payment and saves you thousands, plural, over the life of the loan. So, the big takeaway here? Polish your credit before you ever sit down with a lender. It's the basic stuff. Pay all your bills on time. Reduce your credit utilization by keeping those balances low, and comb through your credit reports for errors. And above all else, seriously, avoid taking on any new debt before you apply for a mortgage. Keep away from those new car loans for now.
And finally, Section 5, plan before you buy.
Let's talk about the 28-36 rule. This is basically the golden rule of budgeting. It means your housing costs should never exceed 28% of your gross income, and your total debt must stay under 36%. When you plug your numbers into a solid calculator, it uses this exact rule to tell you bluntly, and I mean bluntly, if the home you want actually allows you to maintain your current lifestyle.
Because a true affordability calculator forces you to factor in all of those relentless hidden expenses. If you're looking in rapidly growing hotspots like Meridian or Eagle, you're going to see HOA fees everywhere. Plus, you absolutely must budget for escrow fees, utility bills, and home maintenance. Trust me, if you don't account for the furnace breaking in January, you are constantly going to feel financially stressed.
But hey, it's not all bad news. Local tax benefits can actually shrink that monthly payment you just calculated. We have the Idaho Homeowners Exemption, which covers half the value of a primary residence up to $125,000. That lowers your taxable value right off the bat. A good state-specific calculator is going to take this unique local exemption into account, giving you a highly accurate and usually better-looking estimate.
And listen, if your numbers still look a little intimidating, remember there are local resources designed specifically to help bridge the gap. The Idaho Housing and Finance Association offers some brilliant programs. We're talking down payment help and closing cost assistance, which can significantly lower that initial cash barrier for buyers.
So before you ever look at another real estate listing, I strongly urge you to use an Idaho Mortgage Calculator. Confront your numbers head on and step onto this financial battlefield totally prepared. Because a goal without a plan, well, that's just a wish. So I'll leave you with this. Are your finances truly ready to unlock the door to your dream home? Or are you just guessing with your future?